If you filled up your car recently, you felt it, that sudden, sharp pain at the pump that makes you do a double take. Well, it's not your imagination. Something big just shifted in the global economy, and we're all starting to pay the price. So let's break down exactly what is happening and why your wallet is feeling such a massive squeeze.
To really get the gravity of what's happening right now, we have to talk about this year, 2008. You know, for the global oil market, that year represents a really critical, painful memory. It was a high watermark that a lot of people hoped we wouldn't see again for a long, long time. And that's the headline. We just blew right past it. The price for real-world, physical barrels of oil has absolutely soared to its highest point in over 15 years. This isn't just another price fluctuation, you guys. This is a historic moment.
That's the million-dollar question, right? What on earth just happened? Was it one single event? A perfect storm of factors? Let's unpack the chain reaction that got us here, starting with the event that pretty much lit the fuse.
It all starts on the international stage with a massive shock to the system for U.S. crude oil, a move so unusual that traders, honestly, are still scrambling to figure it all out.
And here's what that something was. For the first time ever, the price for U.S. crude oil surged so high that it was trading at a huge premium over Brent crude, which is the global benchmark. Now, I know that might sound super technical, but it's a fundamental disruption. It signals a massive sudden tightening of supply right here in North America, a shockwave that happened just as tensions with Iran were threatening global oil routes.
And just to be super clear, we're not talking about some abstract number on a futures contract for oil that's going to be delivered months from now. No, we're talking about the physical oil price. This is the price for the actual stuff, the real barrels being bought and sold today. It's the most direct indicator of what's happening with supply and demand in the real world right now.
So this is the chain reaction. You've got these simmering geopolitical tensions over in Iran, creating this really volatile backdrop. Then bam, the shock hits, a sudden squeeze on U.S. supply. You put those two things together and you get the impact, a surge in the price for physical oil to levels we literally haven't seen since 2008.
But you know, these are all global headlines. What really matters is how this translates to the price you and I are paying at the pump. So let's connect the dots from the global market directly to your wallet.
And here's that direct line. On the left, you've got the complex global story, the war, the market shock. And on the right, you have the simple, painful result. All that international chaos translates directly into higher costs for millions of us, with states like Illinois already feeling that immediate pain.
$4.25. Let that sink in. That's the average price per gallon drivers in Illinois are facing right now. That's a number that completely changes household budgets. It affects how far you can drive, what you can afford, and the financial pressure your family is feeling every single week.
And this chart really shows just how fast this all happened. I mean, we're not talking about some gradual increase over months. We're talking about a 70-cent jump in the average price in a very, very short amount of time. That speed is what makes this so disruptive for people's day-to-day lives.
So, this brings us to the unavoidable final question. Where do we go from here? With so much instability in the world, what does the road ahead really look like for all of us?
The truth is, we are in uncharted territory. The combination of a fragile U.S. supply chain and this incredibly volatile global stage has created a new reality. So the question we're all left with is a heavy one. Was this just a freak event, a perfect storm that's going to pass? Or have we just witnessed the first major shock in a completely new era of energy instability? Let me know what you think in the comments below.